Welcome back to the Dividend Diplomats YouTube channel. You know you got your boy Bert and Lanny, the Dividend Diplomats. And guys, we're talking to you about, yes, another dividend growth stock that's probably not on anybody's radar but ours.
That's right. That's an excellent tease, Lanny. But before we get into it, smash that subscribe button below and give this video a nice thumbs up. Come on, everybody. Let's get excited. Let's get hyped up. Lanny did some digging. He found a potential undervalued dividend stock that it could be a diamond in the rough for his portfolio, my portfolio, and more importantly, all of your dividend growth stock portfolios.
Guys, we are crushing. We're almost at 13,000 subscribers. We really appreciate the support and following. It's pretty sweet watching this channel just build, because we wouldn't be doing these videos if it wasn't for you coming back to watch them. You know, hopefully these are very educational, but also, hey, hopefully they're building up your stock watch list, maybe your dividend stock portfolio, as you pursue the goal of, what's that, Bert?
Financial freedom. That is the beauty of this community, Lanny. It's not just about the two of us finding stocks and telling everyone what to buy. We love reading your comments, seeing what stocks you're watching. We love seeing the other videos, see what other people are watching. It's all about sharing information, working together, and doing what we all can to motivate each other so we can reach financial freedom together.
So guys, we are heading back down 71 South, except this time we're not going to Bert's favorite city. We're not going to the bus, Columbus. No. We're not touching down in Buckeye land. So don't you guys worry, especially the good old Michigan viewers here. We're actually heading over to Medina, Ohio. Yes, we're looking at an industrial based company, publicly traded company that produces substantial amount of revenue in the painting, coatings, and sealant space, Bert.
Whoa, that is crazy. But you know it, Lanny. You know I love it. Doesn't matter whether it's in Columbus, Cincinnati, Cleveland, Akron, Orville, Toledo. It doesn't matter where in Ohio. We love Ohio-based dividend growth stocks to cover here on this channel.
What you should say is, like, where is it from? And you're about to say, like, what, Medina? I say it doesn't matter what company where you're based.
That is why I didn't say it, because I knew that's exactly where you were going with that one. Can't pull that one past me, Lanny.
Well, you listen up, jabronis, guys. We're in Medina, Ohio. We're looking at RPM International. Ticker symbol is RPM. Now, before we dove into this stock, we look at the three dividend stock metrics. First, the price to earnings ratio less than the S&P 500.
What?
Two, that payout ratio less than 60%.
What?
We look at that dividend growth rate, that 5-year growth rate on average. Why? Because we want that passive income stream to grow without you doing anything.
What?
Last but not least, we'll look at the bonus metric, Bert's favorite, the dividend yield.
That's absolutely right. Let's get right in here, Lanny. We are excited. We are pumped up. We are amped up to talk about this undervalued dividend growth stock. So stone cold, Lanny, what company are we talking about here today?
And that's the bottom line. Well, Bert, so when we're talking about RPM International, again, ticker symbol is RPM. You know, so far this year, they're down about 17.62%, which actually is 3 times or more than 3 times what the S&P 500 is down year to date, which is close to 5.5 to 6%. Now, they came out with they're on a fiscal year basis, a June 30th year end. So they came out with their second quarter earnings back in January, and they give just a high level overview of some of those results. You know, net income was actually pretty flat, Bert, and community, you know, and then on top of that, though, net sales were up about 10.3%. So there's positivity there. However, when you're in the industrial section, supply chain is a huge disruptor. And guys, we all know what's happening right now with supply chain, really disrupting sales, volume, and costs.
Yeah, I
And
was gonna say, yeah, and you can see that coming through there. Some of the impact is already being felt with that revenue growth and then the cost creeping in to help keep net income down in there. And as you saw and you were finding here, Lanny, you said what the CEO said it's going to cost them over 200 million in sales from the disruption alone from supply chain issues.
I mean, 200 million in sales just because of supply chain disruption. I mean, that's significant, which is obviously you've seen that reflected in the results and probably what we would expect maybe to finish out the year, which is why it has dragged down on earnings and on their share price. But let's take a look at their balance sheet, Bert.
And I was going to
What's
say,
it look like?
that's going to be one of the bright spots there. The balance sheet looks pretty strong here for RPM, Lanny. One of the metrics that we're always looking at is that current ratio, and it shows the company's ability to pay its short-term liabilities 12 months or less with their short-term assets. Typically, a current ratio of 1 or greater means you have assets that cover those short-term liabilities. We always love seeing a metric there. RPM's current ratio is 1.86x.
Too sweet. So guys, that's RPM right there. Usually you want over 1. They're almost at 2 times. But Bert, when you peel away the inventory, because inventory sometimes could be a longer moving asset from a current asset standpoint. So remove inventory from that current asset total.
Yeah, and that's critical here because of the supply chain issues that are going to cost them over 200 million in sales, as we talked about earlier there. So that inventory may be sitting there for a long time. So yeah, it's a great call out to cut that out of this equation. That's what the quick ratio does. That is still 1.16x. So even without inventory, their short-term assets will cover those short-term liabilities. Now let's move to the longer-term portion of the balance sheet. Let's take a look at that long-term debt. Because Lanny, what direction is that long-term debt trending in?
Yeah, so quarter after quarter, RPM International, ticker symbol RPM, is actually trending down in the long-term debt. They are continuously paying down that long-term higher interest rate debt, which is so nice to see. Companies cleaning up the balance sheet post-COVID, post the pandemic, and even during these very volatile times when your input costs are higher and you're delayed in delivering on your sales.
That's right. So let's just recap that quickly. Sales were up. Net income was flat because of some of the supply chain issues that are impacting their increased costs. The supply chain is also going to impact those future sales there down the line. So you'll see that getting trickled through. Strong short-term balance sheet with a crushing it current ratio and a great quick ratio as well, both of which are above 1, and that long-term debt is trending downwards.
All right, Bert, it's time. Let's start to look at the Dividend Diplomat stock metrics for RPM. So guys, they closed at $81.02 as of March 22nd. Again, down almost 18% year to date. This stock has been pummeled, stone cold stunned, rock bottom, people's elbow, you name it. Now, analysts are projecting a forward earnings of $4.53. So doing the math of share price divided by that forward earnings, their price to earnings ratio is actually less than 18 at 17.89.
Excellent. Discount compared to the market, which is hovering between 24 and sometimes it's been just above 25 as of late. Let's move into that second metric here, that dividend payout ratio. Annual dividend, $1.60. Divide that by the $4.53 EPS. That gives you a payout ratio of 35%. So easily checks that box there below 60%, slightly just a hair below the lower end of our perfect payout ratio range.
I mean, there's perfect safety in RPM's dividend. They pay 40 cents per share per quarter. So being at that 35% mark, you know that there's going to be room for plenty of dividend growth in the future, but they're obviously reinvesting and retaining earnings back for their business.
Excellent segue into that third metric, the dividend growth. They've increased that dividend for 8 consecutive years, and their 5-year average dividend growth rate is 6.30%.
You know, I'll be curious, looking at their, dividend history. I'll be very, very curious about, what RPM wants to do here going forward. Their dividend increase typically is in the month of October, so we might have to wait some time. But given that the rate of inflation is now pretty much at the 8% threshold, I'm curious if that dividend increase might be a little bit higher than the 6.3% on average this year.
Yeah, it'll be interesting, especially with some of these supply chain issues. We'll have to see the long-term impact in the second half of that fiscal year to see how exactly this is going to shake out.
10%, 10%.
The crowd's going wild here, 10%. Let's see at RPM. Bookmark this, save it. We'll come back in October and see how we do. All right, let's move into that cherry on top here. That dividend yield. Oh man, it is so close to crossing a certain threshold, Lanny. What is RPM's current dividend yield?
So guys, they didn't quite get to 2% on the dividend yield, but it's at 1.97%. So we're talking so close. They're still way above the S&P 500, which is yielding around 1.35 to 1.45%. So you're still getting a little bit more bang for your buck with RPM International.
So let's summarize here. PE ratio 17.89, payout ratio 35%, 5-year dividend growth rate 6.30%, 8+ years of increasing that dividend with a yield of 1.97%. Here's what the people want to see, Lanny. What are you going to do with RPM International this week, next week, and down the line?
They're about a 10 billion market cap company. Again, the yield is not quite at 2%. Their 52-week high was in the $101 range. So they're down about 20% from that 52, week high when they hit that mark. They're not too far from the bottom. The bottom right now in the last 2 weeks was 75. Not saying we have a long ways to go, but right now with all the other industrials I have in my portfolio, think Rockwell Automation, Cummins, 3M, I have a few, I have a few industrials in the portfolio. I'll keep this on my, watch list. I do want to watch this stock as a stock to buy, but I'm not going to be adding right now, Bert.
Yeah, no, I think that's a fair conclusion. For me, it really bothers me that their quick ratio is only 1.16. If it were 1.25x, I would be jumping all over this company. I'm kidding, everybody. But in all seriousness, I'm going to put it on my watch list as well. I don't have quite the industrial exposure here that Lanny does, so it's not a bad play. It's not a bad one at the moment, especially as the market continues to fall and other opportunities continue to present themselves. Right now, I'm not screaming to buy. Maybe the PE ratio falls down a little bit, that yield gets above 2.25. That might be the time for me to jump in for RPM.
Tell you what, let me know in the comments who else talks about RPM International. If you've even heard of them, let us know. Obviously, don't hesitate to give this video a thumbs up if you like this dividend stock. Bert, what else do you have to say on this dividend stock here?
Let's just keep moving, everybody. Let's keep finding other undervalued dividend stocks to add to our watch list, to keep researching, and to help keep growing our passive income. That is the name of the game.
Guys, you got the diplomats. That was Bert and Lanny. Another dividend stock that we just analyzed to put out there for the community. Again, if you haven't already, subscribe to the channel. Definitely give the video a thumbs up. We appreciate it. Let's keep growing the community base over here. That was Bert and Lanny from the DD. Over and out.